Hey, welcome back to Shadow Shorts. If you're new to the show, but you're familiar with Shadow Ventures or Shadow Partners, first of all, you're probably not going to recognize me, but you are going to recognize my guest today. My name is Jeff Eccles. I'm a senior advisor and the head of marketing for Shadow Partners. And my guest today is KP Reddy. He's the founder, general partner at Shadow Ventures. And I wanted to bring KP on today to talk about the VC landscape, certainly, but what is the reality of venture capital and what's the reality of investing in innovation for the built environment? So, KP, welcome. Thanks for joining me today. I'm
It's
glad you're here to talk about the VC landscape.
very cool. This will be fun.
Yeah, it will. And everybody out there that knows you, that's familiar with innovation in the built environment, knows that you've got your finger on the pulse of what's going on around here. So I know you wanted to speak to the idea of buying low and selling high, but what's the reality of that when it comes to investing in this world?
Yeah, I'd put something out on social media on this topic, and it's like a made up thing, right? Like how you make money in stocks, you buy low, you sell high. It's like, well, duh, right? So I think part of me was just like poking fun with how people like to simplify kind of investing strategies. I think one of the things that when you look at venture versus like maybe public markets have high liquidity. So if you see a stock you like and it's down and you go and buy it, you can jump out of it and then write it off, right? You can do that, or you can write it up and sell. So the liquidity of the public markets kind of creates this very short term view of the world, and that's what's interesting. Whenever you talk to, I was out with a Fortune 500 private company yesterday actually, and they're like, yeah, we look year to year. We're not looking months and quarters. And so when you look at the public markets, this idea of like the term financialism, which is living month to month, quarter to quarter, to put up your best results, with a lot of lack of long term thinking because there's liquidity because your shareholders can decide tomorrow that they're out, and when they're out, stock drops, right? So it's such a different it's a different sport, so to speak. Same game, different sport, but and I think those ideas of in and out kind of work in that world. I think what I found, kind of what prompted that post was, when if you look at the venture market, it's highly dependent on the flow of capital into these markets from LPs, from angel investors, and then venture funds deploying. And it's quite fascinating to see the lack of pragmatism. It's like, well, everybody's investing in this company. It's clearly overpriced. It clearly will never live up to that valuation. But there's this momentum investing game, and everybody starts deploying capital. What's interesting is like the soft cycle we're in now. This is when founders are being much more pragmatic themselves. The real operators that actually are thinking about, if I have to run this business forever and get it to cash flow, they're still in the game. They're still running around. And by the way, the cost basis of operating startups is much lower. You don't have people saying like, well, I need a signing bonus and a this and a that. Like you can recruit people at, I would say, more a market value price than maybe you could 2 years ago. So the capital is going a lot further, yet people are scared of venture capital. Yet the LPs are saying, well, I don't know. And it's like, so you were more excited about deploying capital into this asset class when valuations were through the roof. And so it's a little bit of kind of the markets that kind of talk out of both sides of their mouth, right? And I think the reality with venture, especially, is its rules are just very different. It's definitely more of a one winner, nine loser power law dynamic than the public market. So I find it fascinating. This is the best time, in my opinion, to be starting a startup. So think about that. Like, what happens when three buddies at a company get laid off and they have an idea? Well, while they're on unemployment, they can work on their idea, and they can, go do something and start something, maybe get some people to side hustle, help them code something or whatnot. Whereas in a really hot market, nobody's losing their job and nobody's leaving their job to come work for your dumb startup. That's just how it is. You know? um, so it's a super interesting time where like the psychology is like overruling pragmatism.
Makes a lot of
Um,
sense.
yeah,
And for anybody out there that is not familiar with Shadow Ventures or with you and your work, um, you're looking at this from the point of view of vetting a lot of startups, about having a lot of conversations and talking to a lot of people in this world, right? What's your day to day or week to week look like?
yeah. It's interesting. I mean that's the part of my job I love. I get about 50 inbound a week, plus or minus. Interview 10 to 12 a week. Kind of first calls, and I do all the first calls myself because I think coming from the entrepreneurial space, I think it's such a disservice and almost disrespectful to say, there's a person on one end that's like betting their life, career, maybe their second mortgage towards making something work, and then you tell them to go talk to an analyst. Like, go talk to this kid over here. I just think it's the wrong way to do business. It makes my schedule very challenging, as you know. But that to me, that's the job. That's the job I signed up for. Is really what it is. And yes, the temperament of startups and founders is very different right now. What I appreciate, we've always told founders like, hey, we want to help you. Like, I think our mission focus, in a way, we want everybody to do well, right? There's way too many problems in our market. We're not going to have 4 companies solve all the problems. It's like 4 million companies are going to solve all the problems. And so we really try to leave the door open because a lot of people do get caught up in the psychology of the time and like, my startup's worth this. I'm like, well, I disagree. So, keep us in the loop. A year later, they come back and like, yeah, you were probably about right. And can we keep talking? um, and I think that's the difference. I mean, our focus is, investing in startups that are actually solving massive, complicated problems, and doing it with deep technology, not just like, oh, I built an app stuff.
So one of the things that's coming up in the world of Shadow is coming up at this October in Atlanta is Shadow Summit.
Mhm.
And you gave me a really good description the other day of how you see Shadow Summit. Do you want to talk for just a minute
Yeah.
about the summit? It's coming up October 25th and 26th in Atlanta. What can we expect out of Shadow Summit?
Yeah, I think we talked about, part of the timing of it is, there's a lot of companies that do what I call unfunded innovation. They have an innovation officer, they're studying the market, they're going to events. But when it comes down to it, and there needs to be board approval to spend money, whether it's investing or adopting, whatever it is, I find that October through the rest of the year is a good time to start setting your agenda for the next year. So the idea is like you bring the market, the customers, the architects, engineers, contractors, real estate developers, and you bring in a bunch of our startups. You bring in other startups, and the idea is for them to frame out like, okay, here's what happened last year. Here's what's been happening. How do we frame that out to what we should be doing next year in innovation? And here's these themes around technology, themes around use cases, and the feedback this is our 7th year doing it, which I can't believe. And the constant feedback is like, KP, I feel like I earned a PhD coming to this conference. Like, it's not a lot of self promotion. It's a little bit of people say things that you have to Google. I've seen CEOs of major firms taking copious notes. It's that kind of conference. It's not someone's going to get up there and talk about themselves. Um, it's much more like being informative and holistic around trends and all of that. So
Yeah, that's one thing that I've enjoyed. I've benefited from having some of these conversations and also planning for Shadow Summit coming up. These really are conversations that are deep dives. Not only, we have a very short format here in Shadow Shorts, obviously, but if you like these kinds of conversations, you value these kinds of conversations, we're just going to go 10x or more, maybe more deep on these types of conversations come October for Shadow Summit. It really is. I think Ian said it earlier today when we were on the call. He said, we kind of geek out
Yeah.
on the content that we produce. It goes that deep.
Yeah. Yeah. I had a CEO once tell me, like, Summit, it helps me keep my CTO honest. I come and learn stuff. Um,
Yep, you're good.
I don't know what just happened. Sorry.
No, you're
Um,
fine.
you know, hey, I get to learn stuff and go back to the office and challenge my CTO.
I love it, and it's that's important, right? We bounce these ideas off against each other and challenge ideas, and it's all about moving these ideas and moving these innovations forward in the built environment. So, um,
Yeah, and I do think it's interesting. We keep it under 200 people. It's mostly executives. I mean, other than even the startups are executives, right? But of smaller companies, but it's mostly executives. So it just becomes a lot more strategic. It's people that can make decisions. It's people that you can build a relationship and say, let's go take this risk together. Let's go jump off of this cliff together, right? Like that kind of thing. Um, Instead of having to go through this wild org chart to get to the right people, it's like you have the right people there. And then the other thing is like, what I've grown up in this industry, and what I always love is how people, there's just a greater good collaboration idea. I was talking to a bunch of CEOs in the construction space. It's like job site safety. Nobody wants to compete on that. It's like, oh, I killed and hurt less people than you. Like that's not a competitive thing. People want to do good and people want to say, hey, what's working for you? What's your best practice? How do we do this? How do we do that? And that's what I love about our industry. It's a massive industry, but in many ways it's a close knit group that really influences and changes what our future looks like.
yeah, that's a good point. I'm looking forward to October. And if you want, like I said, if you want to know more, shadowsummit.com, the URL is in the bottom left of your screen right now. Um, Reach out to KP. He's accessible. I'm accessible. Um, Maybe your reach out to KP gets pushed my way, which is perfectly fine. But we are happy to have you join the conversation and want you to come along with us. Help us push innovation for the built environment. That's what this is all about, so that everybody wins. KP, thanks a lot for joining me today for
Thanks,
this
Jeff.
Shadow Short and talking about the reality of investing in the VC world and innovation for the built environment. And we'll see everybody again for the next Shadow Short.
All right. Thanks, Jeff.
Thanks.